A harsh Canadian winter hurt Dollarama's Q4 sales. The company is now forecasting slower same-store sales growth. The stock's down about 7% today, but our next guest sees significant upside over the next year. And joining us now is Arun Sundaram, Senior Vice President at CFRA Research. Thanks for joining us today. How do you score this quarter overall?
Yeah, I think overall the quarter was slightly below expectations, a little bit disappointing. But if you look at the top line, so that their comp sales this quarter only grew 1.5%. That's actually the slowest going back about 4 years. But there was some one-time things in the quarter. You talked about the unfavorable weather. There was also a calendar shift this quarter where they had they lost essentially one major week of holiday sales. So when you're adjusting for that calendar shift, their comp sales actually grew 3.5%. Which is better, but still that's a deceleration from some prior quarters. But the good news is that the adverse weather that really had an impact on their January sales month. And as they entered February, which is their Q1 of this current fiscal year, it seems that traffic and sales have sort of rebounded in February. So that bodes well for the remainder of the year. Which
is fine, except I think we got hammered in Ontario with this winter weather far beyond January, so that might be a problem moving forward. The stock is down 7% today, as you know, but you have a 12-month price target of $217. That implies 25% roughly upside. So do you think investors are getting it wrong right now?
I wouldn't say investors are getting it wrong, but I think you have to look at the longer-term growth story of Dollarama, right? So right now they're making some major investments in various parts of the world. So they're a leading value retailer in Canada, as everyone knows. They're also a major player in Latin America as well through their investment in Dollarcity. And they're investing in that business as well. Dollarcity just entered Mexico last summer, so they're still ramping up operations there. So that's having a slight near-term profit impact on the business. And then also Dollarama last year, they acquired a leading discount retailer in Australia called The Reject Shop. And that business is a pretty sizable margin drag right now. They're kind of restructuring that whole business in Australia right now. And that could take a few years before we start to see better sales as well as better margins in that business in Australia. So if you put all this together, the company is growing, but there's some near-term headwinds impacting the profit line. So we're kind of looking past a lot of those near-term headwinds right now, and if you and really looking towards a longer-term growth story of Dollarama. And this is a company that's growing massively in terms of their store count, both in Canada and in Latin America and Australia as well. And they're also one of the top earnings compounders in our entire retail coverage. This is a company that generates above 20% operating margins. Not many retailers even generate above 10% operating margins. So it goes to really show you the powerful economics that goes behind these small box dollar stores.
The company is also ramping up capital expenditure, so $470 million they're building. Besides everything else they're involved with, a logistics hub in the western part of the country. Does that spending, is it a concern for you right now?
No, not at all. This is needed. They really need a logistics hub in the western part of Canada, and once they get that logistics hub in the western part of Canada, then they can start to expand their store base in various parts of Canada, like Calgary, for example. Right now, they're heavily concentrated in the eastern part of Canada, and they have really just one hub in the eastern part of Canada. So as they build that second hub in Western Canada, I think they'll be able to accelerate their store base. And keep in mind, right now there's about 1,700 Dollarama stores in Canada, but the company's targeting about 2,200 stores across Canada by 2034. So that's some pretty sizable upside there in terms of store count. They're also growing their store base in Dollarcity. I talked about, they just entered Mexico. They have about 700 Dollarcity stores today, and that's expected to grow above 1,000 by 2031. And then even the Reject Shop, the discount chain that they bought in Australia, there's only about 400 stores right now in Australia, but the goal is to have about 700 by 2034. So in all different geographies, they're expanding their store base, and I think that is probably an underappreciated driver of the longer term growth story of Dollarama. And I think that's also helps support its premium multiple. The stock does trade at a premium relative to other retailers. And I think it's because this is a company that's rapidly growing their store base and they have a really attractive margin profile.
Okay, I've got about a minute left. The CEO's talking about how the fuel concerns coming out of Iran will affect supply chains, will affect price point at some point. He kind of says it's inevitable over the next few months to a year. How important is that price point for Dollarama consumers? And do they have other places to go, or would they go without, you think, if prices go up?
Yeah, no, I mean, Dollarama is still one of the leading value retailers across Canada. So they have fixed price points. They go from $1 to $3 up to $5. They obviously this is a company that really prides themselves on value. So they like to say that they'll be the last to raise prices because they really try to focus on that value proposition. But yeah, no doubt that the longer this war goes on in Iran, that's going to impact consumer sentiment, consumer spending, and also impact even margins for Dollarama. They're a heavy importer, all right, and transportation and freight costs are going up. So there could be a margin drag this year if this war does prolong. But again, these are, I would say, near-term supply shocks to oil that hopefully should normalize, over the longer term.
All right, Arun, I got to leave it there. I appreciate you joining us on the program. Arun is Senior Vice President, CFRA Research.